Welcome. In this video, ZBCN coin price is unstable. Where will it go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking carefully at the chart, we can observe that the price action has been steadily trending upwards in a certain direction. This regular upward progression can be described as a classic rising trend line. The trend line is supported by periodic patterns of higher lows and higher highs, and over time it has become a reliable line of support. In technical analysis, trend lines provide important clues about the direction of the market and reflect the psychology of investors and the behavior of market participants. In this context, the presence of the current uptrend suggests that the market is generally optimistic. Currently, the price is trading quite close to this trend line. This touch point has been tested many times before, and each time the price has reacted upwards with support from this level. Therefore, this area can be considered as a strong support level, not only from a technical point of view, but also psychologically. A retest of this level could reignite the buying sentiment of market participants. This is because a trend line that has worked successfully before usually tends to produce a similar reaction when it is retested. The probability of the price making an upside bounce from this area depends on many factors. First of all, this trend line functions not only as a horizontal support, but also as a dynamic support. This means that as the price moves higher, the support level also moves upwards, indicating that the trend is healthy. If the price rebounds with support from this line, this will encourage both short-term buyers and medium to long-term traders, and higher levels are likely to be tested. This trend line has not only served as support in the past, but also represents the general sentiment in the market. Market participants perceive this level as an important reference point and reconsider their trades when this zone is approached. Therefore, if the price approaches this level again, buying pressure may re-emerge. If this pressure is intense enough, the price could bounce sharply up from here, both testing previous highs and creating new highs. However, there is another important point to note here. If the price fails to react to this trend line and breaks to the downside, this would signal a significant change in market dynamics. Because in this case, the uptrend would end and the market structure would be disrupted. Therefore, investors should be prepared for such breakout scenarios. However, in the current conditions, the decelerating downward momentum of the price as it approaches this level makes a possible scenario of finding support and reacting more likely. Volume data should also be included in this analysis. If an increase in volume is observed during price action approaching the trend line, this may be an indication that buyers are re-engaging. If an upward candlestick pattern is formed with a sudden increase in volume, especially at the moment of contact with the trend line, this can be technically interpreted as a turn signal. Such structures provide traders with both an entry signal and a clearer identification of stop-loss zones. In conclusion, the rising trend line in the current structure plays a very critical role in technical analysis. The price's approach to this line and its behavior here is one of the key factors that will determine the direction of short and medium-term price movements. If this trend line is maintained and the price makes an upward bounce from here, there will be a positive mood in the market and upward movements will gain momentum. But we can't decide the analysis with trends only. Let's look at other metrics. Stay tuned. Looking carefully at the chart, we can notice that a certain peak level plays a very critical role. In the past, this level has been an obstacle to the rise of the price. That is, the price has risen up to this zone, but has not been able to go any further and has retreated. Such structures are called resistance zones in technical analysis and are often important psychological thresholds that traders watch carefully. The current price action is very close to this important level, and if it is breached, the market dynamics can be expected to change. Such resistance levels often serve as a kind of test for the market. If the price can successfully pass this test and break through this level, it is often interpreted in technical analysis as the beginning of a new momentum. This is because resistance levels are where selling pressure is concentrated. However, when this pressure is broken, that is when sellers are weak at that level, buyers take complete control, which can cause the price to move upwards much faster. In this case, if the price manages to break above this top level, from which it has retreated in the past with a strong reaction, this could herald a brand new acceleration in the market. Because with an upside breakout of this level, many technical traders will be looking to increase their positions, and at the same time, the price may move much faster upwards as short positions with stop-loss orders will be liquidated. In a sense, this creates a domino effect, and a small breakout can start a big bullish wave. Moreover, such breakouts are meaningful not only in terms of price but also in terms of volume. Usually, trading volume increases during resistance breakouts. This increased volume indicates that market participants are confirming the breakout. If a significant increase in volume is observed during this possible breakout, this generates a technically stronger signal and strengthens the likelihood of the price continuing its upward movement. At this point, volume supports price action as an important component of technical analysis. In addition, this breakout can be extremely important not only for short-term, but also for medium and long-term trend structures. This is because breaking through this peak level, which has been tested many times in the past and which the price could not hold on to, also indicates that the psychological threshold of the market has been broken. Since many traders in the market consider this level to be significant resistance, expectations are raised after the break of this zone, and there is a strong belief that higher levels will be tested. This is important not only for users of technical analysis, but also for algorithmic systems. Many algorithmic trading strategies automatically activate buy orders upon breaking certain levels. This results in a rapid upward acceleration of the price instantly after the breakout. Especially in highly liquid markets, the effect of such algorithms becomes more pronounced, and the moment of the breakout can be reflected as a price spike. In addition, the breakout of this zone causes investors to psychologically perceive that the uptrend has begun. This causes the majority of market participants to gain confidence and increase their appetite for risk. In technical analysis, such structures are called breakouts, and breakouts usually signal that the following move will be stronger. This is because the breakout not only removes the existing resistance level, but also declares the end of the pressure that previously pulled the price down. After breaking through this resistance, the price can often return to the same area in a move called a retest. This means that the level that worked as resistance in the past is now being tested as support. If there is a retest in this area and the price resumes its upward movement, this indicates that the breakout is permanent and the uptrend has become sustainable. The MACD indicator is a powerful momentum and trend following tool that is widely used in technical analysis. In particular, it is one of the most reliable signals traders use when analyzing short, medium, and long-term price movements. What is often tracked with this indicator is the position of the MACD lines relative to the zero line. This is because this position gives valuable clues about the trend strength of the market. If the MACD lines are located above the zero line, this usually indicates that the market has a buying momentum and the overall trend is positive. A position above the zero line signals that traders' confidence in the market is growing and the current trend is upwards. This also indicates that the distance between the moving averages is increasing. The greater this distance, the higher the momentum and the stronger the buying pressure. So a MACD value above zero tells us that a positive wind is blowing in the market and that investors are generally positioned in a bullish direction. Lines should not go below zero. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.